All right, tech enthusiasts, buckle up because today's news is all about the juggernaut that is Apple. We're diving into their stock performance, a big management mea culpa, potential new financial partnerships, and some juicy semiconductor shenanigans. So let's get into it. First off, if you're one of those folks who bought a single share of Apple stock back at its IPO in 1980, give yourself a round of applause. You'd be sitting on 224 shares worth nearly 48 grand today. Talk about a glow up. Adjusted for splits and all, that means your investment has grown more than 2,200 times. And what's driven this astronomical rise? Apple's ingenious innovations and strong market positioning, with products flying off the shelves and a devout consumer base that never skips a new iPhone launch. Just recently, Apple rolled out iOS 18, packing it with shiny new features that keep us glued to our screens. However, not everything's been rainbows and unicorns post-iPhone launch. Apple shares didn't quite make the spectacular leap some had hoped for after their Glow Time hardware event. Portfolio manager Dan Niles even had a mea culpa moment when iPhone 16 sales fell short of lofty AI-boosted expectations, dropping nearly 10% compared to last year. Niles likened this to Roy Amara's law. We tend to overestimate the effect of a technology in the short run and underestimate it in the long run. Despite some doom and gloom, he's holding out hope for Apple's long-term prospects, especially with those AI features eventually landing in China by 2025. Speaking of game changers, Apple might soon partner with JPMorgan for their credit cards, waving goodbye to their current partner, Goldman Sachs. The proposed shift stems from Goldman Sachs facing losses in its consumer division, particularly with the Apple Card. Now JPMorgan wants in, but under better terms, negotiating deals to manage around $17 billion in outstanding balances. This move is all about optimizing conditions for both parties. Apple, ever the user-friendly brand, isn't panicking and aims for a smooth transition if it happens. Meanwhile, deep in the heart of Arizona, Taiwan Semiconductor Manufacturing Co. has started producing Apple's A16 chips. These bad boys debuted in the iPhone 14 Pro and are now set to churn out at the Arizona fab, matching yields from their Taiwan counterparts. Even though Apple is facing market share slips in China, Taiwan Semiconductor is riding high on demand for NVIDIA AI chips, and a deal to manufacture Google's Pixel chips is on the horizon. Stock movements? Apple shares are slightly up, finishing the day at 290.88. Not bad for a disappointing short term, huh? As for Taiwan Semiconductor, they're also enjoying a city view, up 0.23% at 167.74, and soaring high with an impressive 89% gain over the past 12 months. There you have it, folks, a whirlwind day in the life of Apple that proves whether it's stocks, new tech, or market shifts, they're always giving us something to talk about. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.